Hi, let's talk about Tencent. So why did I buy Tencent? Of course, it's to support the Chinese Communist Party. I wish to continue donating my money for the rejuvenation of the entire Chinese empire. What else? For the record, it's a joke. I can't believe I have to clarify just in case people cannot detect the sarcasm. So at the end of the day, why would anyone invest in anything? To earn money, right? So we technically all want to be commensurated fairly for the amount of risk that we are taking. And clearly, Chicken Genius saw the same opportunity. So I've actually filmed a reaction video to CGS. Do catch it if you haven't already. So in that particular video, I've briefly went through the qualitative aspect of what Tencent does and how they drive their core businesses and also top line revenue. So in this video specifically, I'll run you through some of my assumptions that I've made and more importantly, my entire thought process before starting a position. So in return, remember to run down the like button and help us get to 88 likes. I think Ponyma will greatly appreciate it. Oh, and one more thing. Not sponsored by the way, but I know many of you out there probably have not maxed out all the available sign-up rewards. Currently, stockbrokers like Tiger, Moomoo, and even Weibo have extremely aggressive sign-up campaigns that gives you essentially risk-free return. Where can you get something like that? Moomoo and Tiger Brokers is giving out cash coupons and even free shares, and if you're lucky, you can get a free Tesla stock. While Weibo on the other hand is giving out $100 worth of Apple shares, and you shouldn't allow all these 100% ROI deals get away. I'll leave the link to all these brokerages in the description box down below. So let's run some numbers first. So I'm using two methods to attempt to derive a fair value range of Tencent today. So let's look at the first way, using an EV/EBITDA approach. So I've provided a rundown of Tencent's revenue growth rate and EBITDA margin over the last 7 years. You can probably retrieve it from anywhere. Evidently, you can see that growth is starting to stagnate significantly in the last 3 years, from the highs of 40-50% to the lows of 20%. In fact, street consensus for Tencent's growth rate to only be 4% in 2022. Given that they grow 0% year-on-year in Q1, I think it will be a fairly fair assessment. However, let's not forget that people like to paint China in extremely bad light, especially in 2022, where it seems to be worsened with the perpetual lockdowns that's happening now. Analysts do estimate Tencent's growth to rebound back to low teens in 2023 and 2024, and I applied an average 10% growth moving forward. So on top of that, I even brought down Tencent's EBITDA margin in the name of being conservative to down to 30%. So for the base case, I've applied a 20 times EV/EBITDA multiple, and 20 times is the lowest in the last 7 years. And I get back a price target of around 766 Hong Kong dollars in year 5, which is 2026. This essentially represents a 16.8% CAGR if the assumptions hold true. Given the figures of revenue, EBITDA are all denominated in renminbi, which is the Chinese yuan, but because Tencent is traded mainly on the Hong Kong exchange itself, I use a standardized exchange rate of 1 RMB to 1.17 Hong Kong dollars for calculations. Moving on to the bear case, I presume that they are going to do 0% growth in 2022 and averaging around 8.5% growth over 5 years, bringing down the EBITDA margin to 28% and using a 16 times EV/EBITDA multiple. It will essentially return me a CAGR of 8.5% for 5 years. Lastly, in my bull case, I still hold the 4% expectations for this year, but bumped up the growth rate in the following 4 years to 15%, then 13%, then 10%, and held EBITDA margin at current levels of 32%. So applying a 24 times long-term EV/EBITDA multiple will yield a 1,000 Hong Kong dollars price target for Tencent 5 years out, and that's a CAGR of 24%. So in my calculations, I thought I was already being pretty conservative. I would love to know more about your own assumptions for those of you who have vested interest in Tencent holdings as well. Now, moving on to the more renowned method, which is the good old DCF. If you were to track back the free cash flow generated by Tencent over the last 7 years, it has essentially grown at a fairly decent pace, averaging around 26%. That said, there's been evidence of some lumpiness where you can observe that capex expenditure tend to jump around whenever there are huge projects or new developments, and you can see a significant jump year on year. Therefore, given that there is an expected headwind of Tencent's top line in 2022, I will presume that growth stays stagnant or even show negative free cash flow growth year on year in 2022. And just for rough approximation, I think 20+% growth seems a little bit too aggressive. So I'll fix them at 10 to 15% for the following 4 years. Assuming that we slap on a free cash flow multiple of 25, while the historical price to free cash flow figure for Tencent has always been between 30 to 50, using a 15% discount rate because that's kind of the IRR that I'm seeking to achieve in my own personal portfolio, the current share price of 352 Hong Kong dollars seems to still provide a rather healthy margin of safety, like we all love. So to sum them all up, in 5 years' time, my range of expectations for Tencent's valuation will probably be around 550 to 850 Hong Kong dollars. So I would love to know what your price targets are for Tencent in 5 years out. Now, given the current setup of Tencent as an investment opportunity from the quantitative aspect, let's discuss about the things that I actually like about Tencent to essentially refute myself in that CGS video. Number one on the list is definitely WeChat. So I would understand that if you haven't seen or used the WeChat app before. Personally, I don't too, because the majority of my network is not on WeChat. However, all I can say is this: it's the lifeblood of China. And you probably cannot find a local that doesn't have WeChat installed on his phone. That's how ubiquitous and pervasive the app is in China today. Just do some ground research and ask any Chinese nationals in your own vicinity. You'll know what I mean. So I think some of you might actually underestimate and even underappreciate the prowess of WeChat. It only has 1.3 billion monthly active users. Meta Platforms has like 3 billion from its entire family of apps ecosystem. I think comparing WeChat with Meta families of apps is just solely inaccurate. So if you were to observe many of the other businesses Tencent has a stake in, many of them actually relied heavily on the entire WeChat ecosystem. JD and Pinduoduo were direct beneficiaries of this closed and exclusive loop, which essentially allowed them to climb to the top and rival Alibaba. On top of that, the average users spend 66 minutes on WeChat services every day, while users only spend 41 minutes on Facebook. It's basically the backbone of the entire internet empire. From cross-selling, to locking people into the ecosystem, to funneling new users to another company, and even the massive scale of advertising in the entire process itself. So the real value of WeChat actually comes from the data they essentially harvest to improve operations and make investments based on significant trends they observe, such as consumer spending, search history, social media posting, etc. They basically make or break both allies and competitors. However, the flip side of the argument is always the idea of cracking down from the CCP, because it has such huge influence to the entire population. Personally, I think it's a lot easier to control a centralized entity. I'm not too sure about you. And Tencent has been rather compliant and aligned with the goals of the administration today. They allegedly censor controversial topics swiftly and have solid policing protocols, so I don't think they will suffer the same plight as the big techs in the United States. So the second biggest driver is definitely Tencent's gaming arm. So I did mention in my previous video that I'm slightly apprehensive about investing in gaming companies, essentially because it is really hard to ascertain the stickiness of the future cash flows. High R&D might also not necessitate a blockbuster game. So that being said, Tencent do have an impeccable track record in delivering for now. The keyword is for now. Basing on 2020 consensus, they have 43% of the domestic game market share and 21% of the international revenue market share. As long as the strength of funneling from WeChat remains intact, I'm sure they will continue to dominate the local markets. But for the international markets, it's up for debate, and I'll remain skeptical on that front. So the third driver is definitely the Fintech and its cloud business. Although Tencent has lost on both fronts to Alibaba in terms of digital payment / digital finance space and also the cloud infrastructure space, I don't think we can just easily write off Tencent just like this. There might be a potential consolidation in the space sometime down the road, but for now at least, I think the entire cloud space in China is still in a rather high growth stage. And we can't really ring the bell too early and say that, hey, Alibaba has won or Tencent is going to win. Last point, I bought into Tencent because of Chicken Genius. Psych! Just joking, wanted to just end the video on this note. So it's fine to take reference from other investors or YouTube creators or Twitter creators or whatever on what their current buys and sells are, but fundamentally, you should always own your own investments and don't end up to the point where you don't even know why you lost money at the end of the day. Love you guys, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!